talking point this morning is going to be Coforge and the acquisition that they've approved of Encora Holdings for 17,000 crore rupees at 1,815 rupees per share. The sellers include Advent and Warburg Pincus. So, any thoughts on this deal and, of course, the QIP that they are going to be mulling and the funds that they are going to be raising for this one?
It's a very aggressive acquisition from Coforge, but from an EPS point of view, it's going to be accretive in FY27. To give you a slight perspective on this, Coforge had a revenue of nearly 16,000 crores in FY25. They expect to grow at 25, 26, 27% in FY26. And the Encora, which they're buying for $2.3 billion in enterprise value, because Encora also had around $500 million of debt there. So, and it's an entire stock deal where they are, issuing stock to Advent and Warburg and other private equity which holds stake there. So, the entire acquisition will get consolidated by the end of this financial year, and so FY27 would be something where we have the consolidated entity coming in. And in given the fact that the kind of run rate that Encora has, it expects $600 million of revenue in FY27, and that gives Coforge a total revenue size of nearly 30,000 odd crores for FY27 there, and with an EBIT margin of 14%, which they've been guiding, it comes to roughly around 4,100 odd crores of EBIT, and a PAT of roughly around 3,100 crores. That gives the company an EPS of 72, and at current market price, it comes to around 23-24 times. And remember, Coforge is traded at a forward earnings of 35 times compared to all other frontline IT stocks. So there is a room there for the stock to move if they are able to consolidate the entire thing for the entire acquisition over the next 2 to 4 quarters there. But what is important is it's an AI and cloud driven company which they have acquired, gives them access to operate from Latin American countries, and especially clients based out of Midwest and West US. So that's something which is important for Coforge.
Okay, and a large acquisition at that one for Coforge, this Encora deal. But let's understand a little bit better in terms of what the contours of this deal are, and of course the fundraising that Coforge is going to be undertaking as well. Ashish is here with all of those details.
Well, yes, Nehi, big deal coming in for Coforge, and brokerage houses have also given a thumbs up to this deal, especially because of the kind of synergetic gains the company will enjoy on account of this acquisition. First up, let's talk about what Centrum is making of this deal. They say it offers deep synergetic gains. Encora has deep expertise in AI-led engineering. That is one segment that they're going to focus on. It will help Coforge enter new verticals and new geographies in the United States. So these are some of the details, and this is how this particular acquisition will help Coforge. They also said that acquisition of Encora would provide Coforge with much needed scale, a $2.5 billion run rate going forward. Nuvama, meanwhile, also says that the transaction is structured really well. They like the acquisition. This will further accelerate Coforge's growth plans going forward. This is a bold step in the right direction, and the transaction has been smartly structured with share swap. Management has guided that the acquisition will be EPS accretive from first year itself, just like other acquisitions that the company has done in the recent past. So yes, it's a big deal and a positive. Remember, the stock has tanked quite a bit ever since the company informed the exchanges that they were to consider fundraising plans. But now that this has come through, perhaps we could see some bit of positive reaction, and brokerages too have given a thumbs up to this deal.
Okay, Ashesha, thanks so much for taking us through that. To understand this deal a little bit better, we have a sector expert, Rahul Jain, Director of Research at Dolat Capital, joins us this morning on the phone line. Rahul, good morning and thanks for your time this morning. First up, right off the bat, give us your first take on this acquisition by Coforge. How significant is it going to be in terms of the transaction of the deal and also the opportunities that it unlocks for Coforge?
Yeah, hi. Thanks for having me. So basically, as we know, this is a significant transaction from a size perspective and adds up about 30% plus to the current run rate of revenue. What we have seen, given that their historical strong organic growth and consistent bold step on the M&A side as well has helped them scale much faster than what the other participants in the markets are registering on the growth side. And we have seen the higher growth is actually able to help them on the organic side with, they scaling up significantly on the size of transaction they are doing on the order book size as well. So we have seen how they did a $1.5 billion Sabre deal. So all this scale also help in the organic side of the business is what we are trying to highlight.
Rahul, how do you see this acquisition helping in scaling up some of its existing segments like healthcare and other verticals that Coforge has?
So yes, this transaction bring in two specific vertical expertise, be it on the healthcare side or on the high-tech side of it. And in the recent analyst day, which they did a couple of weeks back, they have highlighted that to scale from this point, they need to widen the canvas in terms of service offering, vertical addition, and few geographical pockets. So from that point of view, adding this capability on the vertical side will widen the canvas, and we know that the company has done well on the cross synergy point of view as well. So once they enter this broader vertical segment where they have exposure to medtech and other side of the operation, they would be able to expand the canvas.
Okay, and Rahul, to fund this deal, the company has kept this option of the QIP open, but the commentary has also been that they are going to be mulling this in the next 6 months, and it might not even be necessary based on what they feel in the near future. What do you think about this? Where do you think the QIP amount could come at all, if at all it comes, and what could the dilution be on the back of that?
Yeah, so if we see from the point of view of the bigger transaction value, it is funded through a share swap. So that is already taken care by nearly 21% dilution. The QIP would only be required to take care of the 500 odd million of debt which the company is actually taking over with the transaction, because this Encora was an LBO for the existing investor. So to either pay off this 500 million odd debt, they might refinance through a debt exposure, or they might eventually consider a QIP. So only to this extent of $500 million is what the further dilution might happen, and it would definitely be function of what could be the market condition that point of time, what could be the price, is it similar to what we have now. So it will be all dependent on that, and they are exploring all the options. So the dilution would not be significant because it's just $500 million, and the bigger transaction is already taken care. So if we do the current match, it would be maybe another 5 to 6% basis when they do it, at what price they would do it.
Rahul, given the fact that Coforge, had a higher multiple compared to other frontline IT stocks, do you see enough headroom for this stock to go ahead?
I think it is from a pure absolute multiple point of view, I do agree. It is trading at 28, 29 times our estimate. But if we look at the growth premium which some of its peers might be enjoying, for example, Persistent, from that point of view, is actually trading quite reasonable. And this is because of some of the bolder steps they are taking. That market is little iffy about those things. But some of these plans, when they execute, can lead to a meaningful upside. If we just recollect, they raised their last capital some 18, 20 months back at half the price of what it is today. So there was a lot of skepticism at that point of time. But because they delivered well, it gave, out of proportion return. So that is the kind of a play it might happen. So I would say that the risk reward is favorable. Of course, the execution need to be proven, but it definitely provides an opportunity for people who believe in their execution skill.
Indeed, it will. Rahul, great to have you on the show. Thank you so much for your time today.
Thank you.
Okay, let's move on and let's